Most people think owning a home is all about the mortgage, but the truth is that's only part of the picture. There are real everyday costs that come with owning a home, and if you are not ready for them, they can feel like a surprise. Today, I am breaking down the true cost of home ownership so you can plan ahead, stay confident, and avoid feeling financially stretched. Let's make sure you know exactly what to expect before or after you buy. Mortgage and interest, the starting line. Everyone focuses on the mortgage payment, but most people don't fully understand what it's made of. Your monthly mortgage payment has two main parts. Principal. This is the amount of money you actually borrowed to buy the home. Every month, a portion of your payment goes towards slowly paying down that balance. For example, if you borrowed $600,000, part of your monthly payment chips away at that loan, so you owe a little less each month. 2. Interest. Interest is the cost you pay the bank for lending you the money. This amount depends on your interest rate, and in the early years, your payment is mostly interest with a smaller portion going to principal. A lot of buyers are surprised by this. It's totally normal that your first few years feel like you are not making a big dent in your loan. That's how amortization works. But remember, your principal plus interest is only the starting line for your true monthly housing costs. Property taxes. Property taxes are the big one most first-time buyers don't fully factor in. In California, property taxes typically run around 1 to 1.25% of the home's value each year, depending on the county and local assessments. For example, buying a $700 home, right? Your taxes could be around $7,000 to $8,500 per year, which is about $580 to $700 per month, and that's added to your mortgage. They are usually wrapped into your monthly payment through an escrow account. This is why two homes with the same price can have totally different monthly costs, depending on where they are located. Homeowners insurance. Homeowners insurance protects you in case of fire, theft, water damage, or certain natural events. Costs vary in Los Angeles County a lot depending on location, home size, age of the home, local risks like wildfires, floods, or earthquakes. But here's the typical range. Standard areas are between $1,200 to $2,000 per year. Higher risk or brush zones are between $2,500 to $5,000 per year. Certain fire risk buckets, some policies can climb even higher depending on availability. For most standard homes in Santa Clarita, San Fernando Valley, or LA County, homeowners generally pay around $100 to $200 per month in low-risk areas, $220 to $400 per month in fire-risk zones. This is why getting an insurance quote early in the process is essential. Insurance can shift your monthly payment more than people expect. Maintenance and repairs. Maintenance is the cost category buyers think about last, but it's one of the most important. A general rule is budget 1% of your home's value per year for maintenance. For a $700,000 home, that's around $7,000 a year, or about $580 a month. These include HVAC tune-ups, roof repairs, water heater replacement, appliance fixes, plumbing issues, painting, yard work, pest control. Here's a real example. Your AC may be working fine today, but if it's 15 years old, you are getting close to replacement territory, and that can be a $7,000 to $12,000 expense. Having a small cushion each month prevents those big expenses from feeling overwhelming. Home ownership is a lot better when you have a cushion for the unexpected. HOA fees. If the home is in a condo community or HOA neighborhood, you will have a monthly fee. In LA County, here is a realistic range. Basic communities have like $75 to $200 a month. Townhomes with amenities, $250 to $400 a month. Higher amenity or newer communities could be between $400 to $615 a month. Some HOAs cover landscaping, some cover exterior insurance, some cover water, trash, or even internet. A $400 HOA fee might feel high until you realize it covers exterior insurance, roof reserves, landscaping, pest control, pool, or amenities. Always look at what you get for the costs, not just the number itself. Example monthly budget. Let's put this all together with a simple example. Say you buy a $700,000 home in Santa Clarita. Your monthly cost may look something like this. Your mortgage, principal and interest, approximately $3,500, depending on interest rates and how much you put for down payment. Property taxes, about $700. Home insurance between $150 to $280. Maintenance, around $580. HOA, if applicable, can be $0 to $400. Estimated total, between $4,930 to $5,460 a month. This isn't meant to discourage anyone. It's about helping you feel prepared and confident. When you know the true cost, you can buy smarter and plan better. Homeownership is an amazing step, but it comes with real costs that go beyond the mortgage payment. When you understand the full picture, you can budget smarter, avoid surprises, and enjoy your home with way less stress. If you would like a personalized breakdown based on your price range or the neighborhood you are interested in, send me a message anytime. And if you found this helpful, don't forget to like, subscribe, and check out the other videos on the channel for more simple, stress-free real estate guidance.